All right, welcome back. We are diving headfirst into part 6 of our 8-part series on CanSlim. And today we're hitting the letter L. Now, this one letter, it's a total game changer. Seriously, it can completely flip how you think about picking stocks. So what's the big secret here? Well, let's get into it. So let me ask you this. Seriously, think about it for a second. Would you actually do that? No way. Of course not, right? You'd want the heavy hitters, the 300 guys, the all-stars, the players who are going to deliver game after game. You want the best because, well, the best give you the best shot at winning. And that right there is the key. Performance comes way before price. Okay, so let's take that exact same logic and bring it over to the stock market. Your goal here is to build a portfolio of all-stars, right? Not a bench full of has-beens and underachievers. We're not hunting for bargains, we are hunting for champions. You know, it's just human nature to want to buy something that feels comfortable, something that looks cheap. We see a stock that's gotten hammered, it's way down from its highs, and our first thought is, ooh, what a deal. But here's the thing, and it's a hard truth. There's almost always a very good reason that stock is sitting in the bargain bin. This is a classic trap, a behavioral bias, and the L in CanSlim is designed specifically to help us sidestep that instinct. So here it is, the crucial point. The L stands for leader or laggard. It's a really simple idea, but it's also incredibly powerful. It acts as a filter. The system is basically telling you, hey, only put your money in the absolute #1 companies in an industry. Everything else, you just ignore it. Now, what's really cool is how CanSlim defines a leader. See, it's not about which company is the biggest or has the most famous name. Nope. It is all about raw performance. We're talking about concrete, measurable things, explosive earnings and sales growth, awesome profit margins, a super high return on equity, and of course, a stock price that's just on fire. These are the true market all-stars we're looking for. Okay, so we know what we're looking for. We need to find the leaders. But the big question is, how do we actually spot them in the wild? How do you put a number on that dynamic stock price action I just mentioned? Well, lucky for us, CanSlim gives us a very specific tool to do just that. And that tool is called the Relative Price Strength Rating, or just RS rating for short. It's super simple. It's just a number from 1 to 99. And it tells you exactly how a stock's price has performed against every other stock out there over the last year. So if a stock has an RS rating of 95, that means it's outperformed 95% of all other companies. It's a pure, direct measure of market leadership. Okay, now you're gonna want to lean in for this. This is huge. After studying all of the biggest winning stocks in history, William O'Neill found something incredible, kind of like a magic number. He found that, on average, these absolute monster stocks had an RS rating of 87, and that was before they made their gigantic price moves. Just let that sink in for a second. This just perfectly explains the whole idea, doesn't it? Leadership isn't some big secret. The best stocks, they show their strength early. They don't crawl out of the bargain bin. They rise up from the ranks of the market's absolute top performers. So buying a leader isn't about showing up late to the party. It's about making sure you're at the best party once it's already going. Okay, check this out. Here is a chart of Myriad Genetics. I mean, just look at that powerful move it made. But the key thing is to look closer at its RS rating, a 99. A 99! That means it was outperforming practically the entire market. This was not some cheap, forgotten stock people found in a dusty corner. This was an undisputed leader, and it was basically screaming its strength to anyone who was willing to look. And this brings us right to one of the biggest, most expensive mistakes that so many investors make, and that is settling for second best. It's what's known as a sympathy play. Here's how it goes. You see a hot industry, you find the leader, but then you look at its price and you think, whoa, that's expensive. You know what? I'll just buy its cheaper competitor instead. You're kind of hoping that, a rising tide lifts all boats. But trust me, the market, it rarely, if ever, works that way. There's this amazing quote from Andrew Carnegie that just nails this idea. It's a little brutal, but it is so true. He said, the first man gets the oyster, the second, the shell. In the stock market, the rewards are definitely not spread out evenly. The true leader, the real innovator, they get the lion's share of the profits. The copycats, the laggards, they get the scraps, if they're lucky. Let me give you a classic example from history. So way back when, there was a company called Levitz Furniture. They were the big innovator in warehouse furniture, and their stock was an absolute beast. It ran up 900%. Now over here, you had Wix Corp. They were the sympathy play. They basically copied the Levitz model, their stock looked cheaper, and a lot of bargain hunters piled in. And the result? Wix went absolutely nowhere, and eventually they ran into serious financial trouble. So Levitz got the oyster, and Wix? They got the shell. So let's just hammer this home with a quick checklist, side by side. Leaders, they've got high RS ratings, usually 80 or higher. Laggards? Yeah, typically low. Leaders are the true innovators, laggards are just the sympathy plays. And this is a big one. Leaders are making new highs in price, while laggards just look cheap, but it's usually a trap. The performance gap between the two is just massive. Okay, that was a lot to take in, I know. So let's do a super quick pop quiz. Just 2 questions to see if it's all sticking. You ready? First question. A stock with an RS rating of 90 means it has outperformed what percentage of all other stocks in the last year? Got it? The answer is 90%. Exactly. It means it's in the top 10% of all performers. Simple as that. All right, question number 2. Buying the number 2 stock in a hot industry just because it seems cheaper than the leader is known as what? And that, my friends, is the classic sympathy play. And it is a trap that you now know exactly how to avoid. And really, that's what the letter L all boils down to. It's about discipline. It's about learning to ignore the thousands upon thousands of mediocre stocks out there and instead focusing your hard-earned cash only on the proven winners, the true market leaders. So there you have it. That is the power of the L in CanSlim. It's all about learning to tell the difference between a leader and a laggard. Now, this is a super critical piece of the puzzle, but you gotta remember, it is just one piece. So are you ready to see how the rest of it fits together? Well, if you want to master this whole system, make sure you hit that subscribe button right now. We are breaking down every single letter of CanSlim to give you the complete toolkit for what is truly one of the most statistically proven approaches to the market. You don't want to miss a single part of this. Coming up next, we're jumping into the letter I, which stands for institutional sponsorship. Why should you care who else owns the stock you're looking at? And how can you figure out if the smart money is getting in or getting out? We're going to cover all of that in the very next explainer. Just click the link on your screen, and I'll see you over there.